Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. A big episode for you today as we're going to be taking a deep dive look into updated miner targets and our live miner margin analysis. In addition, we've just received June production results out from Hive and have some great news from Soluna Holdings. A lot to get through. Before we get into it, take a second, smash the like button, guys. Big help to myself and the channel. Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below how you're feeling about the Bitcoin mining sector in general and your top pick in the group. With that being said, let's get into today's video. All right, guys, away we go once again. This is going to be a good podcast, Anthony, taking a look at live miner margins and growth strategy, updated targets, HPC outlook. There's a lot to unpack in today's episode. In addition to that, a great update from Soluna. They're having some strength today in terms of share price. And we have June production results from Hive, one of the top growth stories of the year. So a lot to unpack. Before we get into it, Bitcoin price itself, Anthony, still in that same range as yesterday. However, the miners having a strong start to the day, tapering off a little bit, but generally green across the board.
Yeah, Bitcoin's been on that 108,000, 109,000 for the last few days now, so it looks like it's stabilized there. No massive movements in terms of volatility, but the miners, I think we've got a bit of a mixed bag today. We've got a couple that are doing exceedingly well, and a few that are sort of not doing as good, and no real reason. We had covered yesterday the news of the potential acquisition of CORZ by CoreWeave, subject to obviously shareholder approval, and we can see that the Core Scientific share price and CoreWeave share price have started to continue to fall today as well. So I think overall the sentiment was I think people felt it wasn't the offer they were expecting, and maybe that gap now between the announcement and the fact that the rumor had come out just over 10 days ago suggests that most of the profit was out there on the table, so people are probably sold out and looking to utilize that money elsewhere. So that's CoreWeave, but one stock that's having a great day today, Soluna Holdings, a company we've covered now for the last 18 months, and it's probably the smallest miner that we do cover. If you look at the market capitalization, it's actually 14 million today, but we've covered it when it was as low as probably about $8 million. And we'll talk more about why that potential increases today. There's a good update from the company, but it's one of these small companies that they looks like they punch a little bit above their weight in terms of what they're doing, in terms of projects, in terms of mining. So they do self-mining, but it's a small amount of self-mining, but they focus on hosting mining, and they're also trying to deliver some HPC co-location. They did have a project looking at sort of like doing HPC demand service themselves, but they found it's quite tricky, and it's not for every company out there to do it. We talked about this before. The cost of these GPUs, not cheap, and there's no guarantees how many years you're going to get out of the GPUs, because we've been in this space now for a few years, and we're already seeing companies now buying Blackwell 200s, Blackwell 300s. Well, there was the H100s and H200s out there, at the start of 18 months ago, and they seem to be by the wayside now. And if you want to buy these machines, we've heard from certain CEOs, you're looking at just over 2 years to pay back the cost of the GPU before you start making any margins. And if you're having to replace machines after 2 years, where is your profit? So I think Soluna have realized that quickly and decided to focus on other elements. And the co-location deal, which we spoke about, obviously because of the Core Scientific and the TeraWulf deal that are out there, and other companies have now followed that strategy. We've got Galaxy also got a deal with CoreWeave, as has Supply Digital, in the same sense, the co-location deal, because that you're providing a service and you're going to get rewarded for that service. It's a contract. You know what the amount is at the start of the contract and during the contract, and you know exactly what it's going to look like over that whole period. Whereas Bitcoin mining, I don't know what the price is going to be tomorrow, and that's the challenge that everyone has. And we talk about mining, we talk about difficulty, we talk about halving cycles. I mean, if miners are struggling now at 108,500, and believe you me, a lot of miners will be struggling at that price. They're not making profits at 108,000. Some of them are. We've talked about the ones that are, but most of those miners that we cover there will not be making total profits out of that 108,000. It's a real challenge, and in 2.5 years' time, you've got another halving going to occur, which means that the power required to get one Bitcoin is going to be twice as it's going to be twice as much as what it is now. So that's the issue with mining. So HPC, and we'll come on to this more towards the end of the podcast, is sort of like more of an attractive option for some of these miners, and we've seen quite a few progress. But those miners at Bit Digital, again, we spoke about Bit Digital yesterday. They've had a good couple of days now. In fact, it was only when Sam Tabar decided to go out there and purchase 750,000 shares, the CEO going out there and saying, "Well, I believe in the company." He's bought 750,000 shares at $2 each, and he'll be happy today because the share price is. It was over $4 earlier today, so he doubled his money in the space of like less than 2 weeks. But he's not here to double his money in 2 weeks. He's here to show shareholders that he believes in the way that Bit Digital are doing their business, and he feels that they're undervalued. Well, the good thing is Bit Digital is now worth over $1 billion market capitalization at the current share price, and that's a far difference from where it was, as I say, a couple of weeks ago. So that increase in valuation gives a number of other levers for Bit Digital to utilize as they grow this HPC strategy, which is what they're going to focus on as they go forward there. Good to see CIFR, Mara Holdings, TeraWulf also showing nice green increases today. CleanSpark's up as well, as is Riot and Bitfarms, but there's a few that are in the red. Hive's in the red, and we'll come up with some updates from Hive today, as is Bitdeer, as is CORZ Scientific, which we've already mentioned about the acquisition, and shareholders believing that they feel that's not the deal they're expecting.
Yeah, some good commentary there, Anthony, and really a nice segue to today's episode. A couple of comments. You talk about the CoreWeave price, very reminiscent to me about the Riot proposed takeout of Bitfarms. A lot of people concerned with that price at that point in time. $2.40 was the offer. People were saying, hey, this should be higher, $6, $7. Now take a look at Bitfarms price. The 240 seems a lot more reasonable. So I do think it's partially human instinct to greed essentially, want more out of the deal. And it'll be interesting to see how that one shakes out. You and I are both going to just sit on it for a few days and let the market recover here.
Yeah, and just remember, we've got to go back to June last year when that first announcement for the 200 megawatts, and we were at the Denton facility. Remember the offer that came through from Corp at that point in time? That was $1 billion for the company, which was very quickly turned down. Roll forward 12 months, and that $1 billion offer has been put to $9 billion offer. So for the layperson just sitting out there, in the space of 12 months, this company's offer has been increased, 900%. So it's but the expectation, and shareholders who've seen this deal, they think it's great. We're going to get the company's going to make $700-800 million dollars a year from the co-location deal, with potentially more power to go to more clients, so that you could end up with $1 billion a year in net income. You give these companies even a prudent multiple of say 15, that's $15 billion. Now it's not $15 billion today, because obviously a lot of work's got to get those sites ready for that, but they are in the process of converting sites now. So you're looking at maybe the next 18 months to 2 years to complete that, and then you're into the realms of that's $1 billion a year. So we'll need to hear more from the thought process from Adam and the team and what they were thinking. And as I say, some analysts, I think Cantor, have come out and said wasn't the deal they were expecting to be filled, and a couple of other analysts have come out and said the same, and equally there's a couple of analysts who said it's a good deal. So I'm waiting for the dust to settle to see what the impact is. Obviously, the more that CoreWeave share drops, the more impact it is to CORZ Scientific shareholders, because for every share that you hold in CORZ Scientific, you're going to get 0.1235 shares in CoreWeave. And I think the calculation at the moment, if the CoreWeave share price drops to about $120, that's worth around about $15 for each CORZ Scientific share. So that's a sort of very simplistic maths at the moment to show you where we are on that there.
Yeah, nice to run the numbers. I know you and I both did that last night as well, Anthony. The other thing I wanted to bring up, you mentioned Bit Digital. They're having extremely strong performance to kick off July here. We're seeing that across this Ethereum treasury strategy segment, I guess. We're seeing a number of companies now get involved in this same Sailor-esque or strategy-esque type of model, but on the Ethereum front. So interesting to call that one out, Anthony, seeing a lot of strength there. And the final point you brought up, just on the technology roadmap on the HPC AI front, haven't heard anyone talking about H100s or H100 purchases this year. So that does show you how quickly these GPUs can become irrelevant as newer models and versions come onto the market. So some great points there, Anthony. Now, before we get into the main event here, you guys, the margin and the updated target analysis, we did want to run through some production numbers and a nice little update from Soluna, as you alluded to. So Hive just came out with June results. This is one of the miners we're going to talk about later in the presentation that really is putting their foot on the gas in terms of their exahash self-mining growth targets in 2025. So I wanted to get an update there, Anthony. Obviously progressing towards that 25 exahash per second goal. I think they stated by American Thanksgiving, and a relatively strong month in terms of the numbers.
Yeah, I mean, they achieved 11 exahash at the end of May, and now it's up to 11.4 exahash there. So they've achieved their target for the first half of the year. They've got some aggressive targets for the second half of the year. So by the end of Q3, we're expecting around about 18.5 exahash. And as you quite rightly say, Thanksgiving Day, I believe that's in November. And a 7 exahash more. This is certainly in the realms of like IREN's strategy to increase their hash rate. So, but again, you have to say Hive are literally upgrading one site there in Paraguay to deliver this hash rate. So it's on one site. That work was actually started by Bitfarms. It's been continued by Hive, who've purchased the site from Bitfarms. And you fully expect them. They've consistently come out month after month and said what's happening. They had some big increases throughout the month of May and early June. Literally 1 exahash every week was coming online. And we'll see more of that in the second half of the year, phase two, they call it, as they aggressively get to that 25 exahash and puts them sort of like in that top tier then in terms of a hash rate, along with the likes of CleanSpark, IREN, Riot, and Mara. So yeah, as I say, but if you look at the monthly update in terms of Bitcoin, we're starting to see now what they're delivering in terms of Bitcoin mining. So if Bitcoin mined for June, 18% higher than it was in May. Now in May, they were obviously plugging machines in and didn't get the benefit of May of that hash rate. So they actually got to effectively 10.4 hash rate at the end of May, and they've increased that to 11.4 in June there. So, but but the Bitcoin mined has gone up by 18% to a total of 164. So that's a good total there. In terms of revenues, that's $17 million revenue for the month there. So that's a nice increase to see that there. In terms of average operational hash rate, so this is the average what they have. So as you're plugging in mines, you don't get the benefit for the month. So they can see from their fleet what they're achieving, and the average for the month was 11. So that's actually really good utilization of the hash rate that they've got plugged in. Operational power, 220 megawatts across sites in Paraguay, Sweden, and Canada, and that will increase as phase two gets energized, with another 100 megawatts coming on for the second half of the year, taking them up to 320. In terms of efficiency, they're one of the most efficient fleets in the market. They're at 20 at the moment. There's only about 2 or 3 miners who've got a more efficient fleet than Hive. We've talked about those: IREN, CleanSpark, CIFR, and I think Mara Holdings have also run that 20. But then it's down to Hive, and then you've got a few more just over 20. So efficient fleets. That will help Hive out, because we know Hive have struggled, especially in Sweden, with some of the policy over there in terms of energy and the tariffs that have been applied to energy. So they've not been able to maintain previously some of the lowest power costs across the fleet. In terms of peer miners, we see the Texas miners achieving 3.5 cents. Hive haven't been able to do that. But in Paraguay now, as they've ramped up production down there, That power's closer to 4 cents a kilowatt hour. So the blended rate for Hive will start coming down. That's more profitable. And what will help them is the efficiency of 20, and they're expecting that to drop to 17 by the end of the year as they add more and more machines. That will help them with a far better margin come the end of the year, where they'll be probably producing around about 12 Bitcoin a day. So you can see now in June, 5.5, that's the target 12. So that's more than double where they are at the moment there. And in terms of Bitcoin mined per exahash, 15, which is probably, you know, in the top 3 or 4 of all the miners that have submitted their returns at the moment now. So it's a good utilization, a good Bitcoin per hash rate. Hive are generally, you know, one of the top 2 miners out there, month after month over the last 4 years, and another solid update.
Yeah, strong month for the team at Hive, and we're going to talk about some of the HPC AI updates a little bit later in the presentation as well. Now, a good update from Soluna. They've been very active in terms of communication press releases so far this year, coming out today stating essentially full capacity at their Dorothy 2 facility. So we've talked about the number of projects that this company has, some of the updated hosting agreements. They just partnered up with Compass recently as well here. Now coming out essentially stating that this project is done and dusted, completely full to capacity. So really a vote of confidence for the company, Anthony.
Yeah, this is good to see. We talked at the start of the podcast about the size of this company, about $14 million in sort of market capitalization. This is another project that's now been effectively completed in terms of reaching the required level of clients to utilize all that 30 megawatts. They've actually used a long-standing customer this is their like 3rd contract with them. So the expansion now represents an additional very close to 1.5 exahash of hash rate, and it's all powered by renewable energy. And so, you know, Project Dorothy 2, it's a 48 megawatt data center co-located with a 150 megawatt wind farm. And this will be great for the company now. They can now, you know, start managing this project and start focusing on the next one to deliver. They've got a few more out there. Project Catty is certainly one to that's on the books at the moment, and they've got a couple of projects that they're going to do in parallel this year, which will essentially give them a far greater revenue. So it'll be interesting to see their next couple of quarterly earnings as we see these projects ramp up and we start seeing those revenues come through. I mean, they've had good revenues in previous quarters, but with all this additional activity, I'm looking forward to seeing it there. And you can see how this news was taken today, reflected very, very well with the market. As I say, it was up nearly 20% in early time. It was up sort of nearly 18% when we started doing this podcast. So good piece of news for Soluna today. And let's, you know, hopefully not long before we get the next update from them.
Yeah, I don't think it will be long, Anthony. And like you say, really great on the revenue front, also on the credibility front, and just the operator track record here to fill up capacity with that renewable strategy, which is interesting. And you can see those great images provided by Soluna on screen here. Now, we're going to move over to the main event here, Anthony, the analysis portion. Before we do, I just wanted to quickly plug BTCS. They've been on the channel prior, most recently, April 11th, we had the CEO on. We talked about some of the Ethereum strategy or Ethereum HODL companies. BTCS coming out today with a $100 million raise to purchase Ethereum. So similar to what we're seeing from Sam Tabar and Bit Digital. This sector definitely heating up, and one we're going to start to watch a lot more closely on the channel, Anthony, along with the Bitcoin treasury. Now the Ethereum treasury companies starting to pop up. So with that being said, shifting over to your updated table here, Anthony, this is a nice summary. Obviously, there's a lot of moving parts. We get press releases nearly daily in this sector. Your table here shows all of the updated current hash rates based on the most recent press releases and documents. Also the updated targets based on some of the changes we've seen, the percent growth, and then of course the strategy. And this is where it gets interesting. We made reference to some of the miners scaling up their self-mining. Some are pivoting to Ethereum, some are pivoting to HPC. Some like Hive and IREN, for example, are running multiple strategies in tandem. So I wanted to dig into this in detail. Before we do though, Anthony, there's been a few notable target updates on the sheet. So before we talk about the strategy, can you just tell us what's changed since last time you presented this?
Yeah, we've had a couple of updates from miners. So we know that Mara Holdings, who are the largest Bitcoin miner at the moment out there, they've got a current hash rate 57.4. They just recently announced they're now aiming by the end of 2025 to achieve 75 exahash, which will be the largest target for 2025. That's a 31% growth from where they are at the moment. Second, obviously, so that is CleanSpark. They and IREN both achieved their 50 exahash targets by the end of June. CleanSpark actually completed it a couple of weeks early. They've just announced again they're going to look at achieving 60 exahash in the near term. So maybe they've got room to go higher than that. So it looks like, from a pure play miner perspective, CleanSpark and Mara are going to battle it out there. Who's going to become the biggest miner? And we'll start seeing with those top three now, including IREN also at 50 exahash. It'll be interesting to see July's update because we'll have three miners with more than 50 exahash actually in play and see what the Bitcoin comes out there and see who's actually producing, the necessary Bitcoin with the machines that they've got. So I'm looking forward to July's update there.
Yeah, I am too, Anthony. Now, we've also seen a number of companies, we have some examples here scaling down their self-mining or potentially divesting this. We'll talk about a few of the examples, Bit Digital, Core Scientific potentially here. So I wanted to put you on the hot seat. I was actually on Twitter last night, X. I was doing some grok searches, Anthony, talking about the top influencers or analysts in the space. Your name came up here in the top five, along with some of the main names in the space. So Dennis Porter, Amanda Fabiano, Nick Hansen, of course, and Fred Thiel, the CEO of Mara, which you just talked about their aggressive 75 exahash target. So with that being said, Grok considers you to be one of the top five analysts. We're going to put you on the hot seat. I wanted to get your thoughts now on the strategy part. So you just talked about some of these miners gaining momentum in terms of self-mining. At the same time, we have a number of miners that are either scaling down, slowing, or pausing their mining altogether. What do you make of this landscape?
Well, one thing we've actually been covering on the channel for a long time, it's not easy in the Bitcoin mining space. It's not easy as a miner. It's quite challenging. If you've not got the right level of power or the right efficiency, and your margins start to be weaned away, it can be quite difficult. And also, every 3 to 4 years, you're having to then refurbish the fleet, and it's not expensive to buy the latest mining machines, even though they appear to be obviously, from a price perspective, cheaper now than they were in the likes of, 2022, the end of 2021. And so, it's just, the sheer size of these fleets. We talked yesterday about CleanSpark and Mara Holdings having, 250, 300,000 machines. And yes, they'll have a reliability of maybe 3 to 4 years. But what happens after that? You've got to start planning for the next refurbishment, for the next machines. And as we see from the likes of Bitmain and MicroBT and Canaan and new entrants to the market. Mara have invested heavily in Auradine. They're bringing out new machines. We've also got Bitdeer with the Seal Miner progressing. We're starting to see the Seal Miner 3 now will go to production shortly. They've got a target for the Seal Miner 4, which is probably in testing at the moment, get it down to 5 joules. When these companies bring out the more efficient machines, then miners are in a quandary then whether to go out and buy that new machine because it is more efficient, so it brings down the cost of mining, but it comes at a cost. You're having to pay capital amounts out. So the Bitcoin mining business has been a challenge. And what we've seen over the last 18 months is miners start to pivot towards HPC. And the reason they start to pivot towards that is it's more predictable in terms of the strategy, the models, the margins, the revenues, the costs associated with this type of strategy. As we saw laid out by Core Scientific with their deal with CoreWeave, and also by TeraWulf as well. They put all their details out there, exactly what it was going to cost. And you can do that. You can't do that with Bitcoin mining because nobody knows what the price of Bitcoin is going to be. We can all say, if it reaches this amount, this is what it's going to look like. But the thing with Bitcoin is, if it reaches a higher price, you know that more machines come onto the market, and therefore your size of fleet is effectively producing less Bitcoin, and that's where it becomes a real problem. So you might have a large amount. I mean, Mara and CleanSpark have got probably well over 5%, and IREN 5% of the global hash rate. But the hash rate can move massively, and we've seen that over the last couple of weeks. We saw it drop to 634 exahash. It's now back up, getting up towards close to 1,000 exahash. The 7-day moving average is probably 880 exahash. We saw that yesterday from Lux's tables. And, we've already reached 1,000 many, many times. It won't take long before that increases above 1,000, maybe 1,100, 1,200 exahash. And then your size of your fleet starts to be eroded effectively, and therefore your Bitcoin mine production at the end of the month becomes less and less, and that's where your challenge is. And we haven't seen the Bitcoin price. Yes, it's done reasonably well, but it hasn't rallied, I suppose, the expectation. You'd like to see all the challenges with difficulty and halvings be reflected in the Bitcoin price at the moment. And when we can go back to the Sam Sabar interview where he said Bitcoin price would have to be 135,000 before he'd even consider moving away from HPC. And that conversation was well over 6 months ago. I bet his number now is a lot higher than that. And I know, looking at some of these companies' Q1 numbers and what the total cost of mining a Bitcoin, it needs to be probably 150, 160,000 for them to make actual real profits, taking into account things like depreciation, stock compensation. So, and it needs to be around 150,000 and more for many of these miners on here to actually make proper profit.
Yeah, good points there, Anthony. And it's been interesting to see that evolution of the sector. Now, you just brought up one topic there, Sam Tabar's interview, where he said it would need Bitcoin around 130,000. That was over a year ago. If we fast forward, Bit Digital is now one of the examples we have today that have expressed they may divest or spin off the Bitcoin mining, sell that off. So I would assume, Anthony, that means Sam Tabar and team are even more excited about the HPC now than a year ago. But if we look at Bit Digital, and then in light of the CoreWeave news, we've got a clip from their press release last night also stating they may look to divest the Bitcoin mining. So now we're seeing companies actually exiting this space. I wanted to get your thoughts on that piece.
Yeah, I mean, there's a few things that spring to mind, really. I mean, I've already mentioned the volatility of Bitcoin price, but actually the cost of capital, when you go to a bank or investment bank to look at, how you're going to use the levers available for you to drive your strategy, what we're seeing at the moment is when miners looking to move into HPC, the cost of capital is significantly lower than if they'd looking to grow Bitcoin mining. I mean, yes, Bitcoin mining, they are achieving reasonable levels of cost of capital in terms of interest rates, but, not like we were seeing in 2022. Some miners were paying 19, 20% interest rates, and some of those miners are listed in this table here. But now you're seeing probably closer to 10% for Bitcoin mining. But if you look at HPC, we've seen a number of miners actually go down the convertible route and get 0% in terms of raising capital that way. If you were to go and get loans, you'd be looking at low single-digit numbers in terms of that, because of the fact that it's pretty much predictable. So the bank knows, what the returns are going to be like. Are they going to be able to meet the payments? And again, it comes down to that predictability. And as you say, Bryce, we're looking forward to getting Sam on the podcast, within the next week to talk through what's happened over the last few days in terms of how their strategy develops, especially with the Ethereum treasury management. Now it looks like they've gone literally all in on that there. They've now got over 100,000 Ethereum in their treasury, and that's going to continue. I mean, they literally sold all the Bitcoin and converted that. They raised 172 million in their recent offering, and all that's going into Ethereum. And that gives them an alternative play in this space, because they actually stake their Ethereum, so they do quite well on a month-to-month basis from receiving rewards from that there. They're very keen to progress the HPC strategy. They've been looking more and more along the demand HPC, so actually putting their own GPUs in and having a number of clients. I mean, go back 18 months ago, they only had one client. Go today, 18 months forward, there are, I think, 23 or 24 clients now. So I firmly believe, obviously they'll stay within the HPC. They'll keep that treasury management, Ethereum treasury management in play as well, which is a great alternative strategy. That accompanies the HPC really well. And I think they might just probably sell off the Bitcoin mining. I mean, at the moment they've got 1.8 exahash there. Sam doesn't seem to, be enamored with the sort of the Bitcoin mining. He felt it's holding his company back there. So they've not got a massive amount. They did say they were looking to raise that to 3x hash. I can't see him investing money in machines if they're trying to build out their tier 3 data centers and progress that strategy where they know that the rewards are far better. So I think they might spin off the Bitcoin mining and then just focus really on HPC and Ethereum treasury management, which we've seen in the last few days, as you already mentioned in the podcast, some really, really nice returns for some of these companies that are going down that route.
Yeah, it appears to be working extremely well. And the other one we saw out of the Core Scientific article there is the potential for CoreWeave to obviously divest or spin that out as well, as they're an HPC AI focused company. So my next question for you, Anthony, now we've talked about the self-mining growers, the HPC AI growth stories. I wanted to take a look at the differences between the AI models. So if you look down your chart here, there's only two miners listed as pure play Bitcoin miners, Mara and CleanSpark. Every other company has some sort of an HPC AI element. Now, we've seen powered shell type of structures similar to Core Scientific. We've seen direct to chip liquid cooling with Horizon 1, some of the stuff that DMG is doing, also Hut 8 with their Vega site. We've seen full integration with the Singapore test site out of Bitdeer, and obviously what IREN is trying to do in their Prince George location here in Canada. So there's a lot of different aspects here. It really comes down to the amount of upfront capex and then the margins on the back end, how much of that vertical integration you want your company to partake in. But in your opinion, Anthony, based on what we've seen so far, which one of these HPC AI models looks the most lucrative?
From what I've seen so far, the co-location one looks to be the most lucrative because you're not having to use anywhere near the amount of capital, and the returns, looking at the sort of 3 or 4 contracts that have been signed already, look to be really, really good. When you compare to others there. Now, I'm not saying that the more on-demand service, that sort of IREN, Hive, Bit Digital have been utilizing, well, is not good, but it's reliant on having, obviously utilization of your GPU, so having enough customers in there. And, Bit Digital, went from one customer, to 23, 24 customers. IREN, we know now, are pretty much at 100% utilization from their last update, so that's progressing really well from them there. But bear in mind, it comes at a cost. I mean, you've got to raise significant amount of capital to deliver that. You've got to obviously build the facility to a certain standard. You've then got to pay for the GPUs. You've got to make sure that all the sort of attributes for HPC are viable in that particular area. So you're taking on all that responsibility, and then you've got to deliver a great service as well to the customer. Though in all these contracts, I've dealt with contracts before, service contracts, there'll be payment mechanisms so that if you don't deliver what you say, the customer can receive, payment back or part payment of the contract returned for non-delivery. So that's the challenge. I did like the co-location model. It's more of a simplistic, you deliver the facility. Yes, that will incur capital. Fortunately for the likes of Core Scientific, they were able to effectively borrow that from CoreWeave to deliver the first couple of years and get those sort of 4 or 5 sites up and running. So the majority of sites that CoreWeave highlighted for HPC were funded effectively by CoreWeave. That's repaid back over the first 2 or 3 years of the contract. But even when you're paying back over the first 2 or 3 years, there was a clause in the contract that said it wasn't to go above a certain amount. So the company still made great, and I will say great margins, even paying back the capital. And then from end of year 3 onwards, it was pretty much, as we know, getting towards that $850 million a year in terms of revenues, with a very high 70 to 80% total margin. So that's the contract I liked. I'm yet to see, I don't know enough about the business, but I mean, I'm assuming when you think of the likes of on a big scale, you've obviously got the likes of the hyperscalers like Amazon and Apple, and then you've got the likes of CoreWeave. Obviously, they will be delivering that service on a mass scale. So if IREN put all their machines into their site up in Canada, and deliver this service there, what's the level of revenues they could potentially receive with these latest cluster of machines that they're buying, 2,400 of the Blackwell 200 and 300 machines in total. That'll take their total number of machines well over 4,000, I think 4,500. So, what will that deliver in terms of revenues and in terms of margins? Because we know that, initially, the feedback we were getting was it takes us 2 years to repay the cost back, and then you can make a margin in the third year. But I want to see this on paper. How much is that change in technology affecting companies when they're having to replace machines probably quicker than they anticipated? What's the impact of that to a company? So that's why I probably side with the co-location.
Yeah, it's a good point you bring up there. And you got to think, Anthony, if CoreWeave is willing to dish out that type of a contract to Core Scientific, obviously their margins, their returns need to be substantially higher to afford that type of a agreement. So it'll be interesting to see how that plays out. I generally tend to agree that co-location seems to be a nice balance of risk, capital, and return. However, we'll see how this plays out. Now, I also wanted to make reference to another trend we're seeing before we shift over to margin. We've talked about the demand curve for HPC AI. There's a nice slide in the IREN deck. I know Daniel Roberts has talked about this insatiable demand. We've seen some of the miners operating in Canada here. You just mentioned IREN in Prince George. We've got Hive, their Buzz subsidiary, just bought a 7.2 megawatt data center in Toronto. DMG, they have the partnership with the Malahat, highlighting this data sovereignty or data independence. So AI and obviously big data is highly confidential. Some of these countries are actually wanting this within their own boundaries. So this is another evolving status here, Anthony, or evolving trend we're seeing. But this focus to really land these government contracts in addition to some of these hyperscaler contracts as well. So I wanted to get your thoughts not only on the insatiable demand, do you think the AI trend is here to stay, but also on this data sovereignty and national independence angle as well?
Yeah, I mean, on the AI, I think it's certainly here to stay. I think this technology, just like, decades ago when we had the World Wide Web and people said that wouldn't last very long, and we're using it so many hours a day now. I think the AI is here to stay as well. But you're quite right. The insatiable demand where we are at the moment, what we're able to deliver in North America at the moment compared to what's going to be required year after year, you can see why these miners are looking at this potential shortfall in power and how they can contribute towards it. And we've just seen, with Hive's update today, they've signed that purchase agreement for the 7.2 megawatt tier 3 data center located in Toronto. And, you say, why Toronto? Well, Craig Tavares, who's the president and CEO of Buzz HPC, the subsidiary of Hive, says, he believes Toronto's a global AI epicenter. And this acquisition actually puts Buzz to become a cornerstone of Canada's AI infrastructure, sovereign, secure, and scalable. So they're very positive about driving this side of the business. I mean, bear in mind, they've got a massive scalable Bitcoin mining business in Paraguay to deal with. And at the same time, they're looking to, build a facility that will support 5,000 next generation GPUs. Now, we've just talked about the IREN. IREN will have, close to 5,000 when they've received the Blackwell 200 and 300 machines, and is Hive also looking to maybe put a significant amount in that 7.2 tier 3 data center in Toronto once they start purchasing the GPUs to go in there. So this is just a start point. We'll see more and more of these updates as we go through. Hive talked about how they'd reached their sort of target of 20 million annualized revenues from HPC, and they want to be at $100 million of annualized revenue. Well, these type of updates is going to help them get towards that deal there. And again, this will nicely complement the Bitcoin mining business, because this is a more predictable model. The Bitcoin mining there is not as predictable, but it's hoped obviously Bitcoin price rallies, then that becomes a really great business as well. So having two different strategies, they can sort of like look at those as wrong and determine which ones they can that grow quickly and how they can move around. And we've seen other miners. I mean, look at Bitfarms. They were literally, a year ago, a Bitcoin miner trying to grow their hash rates. I think it's 21 exahash, and now they've got to 19. They said, nope, that's the end of Bitcoin mining. We're fully focused now on delivering HPC, and we've got some great sites which we acquired from Stronghold Mining, and we're going to deliver it that way there. So you can see this pivot across there. There's a gap for HPC, and the miners are a great way of closing some of that gap because they've got power available at sites there, and generally, location-wise, they'll be close to campuses or cities where they can, get great connectivity and all the attributes required to deliver a great HPC service.
Yeah, most definitely. And what an exciting sector for us to cover. Now, with all that being said, we've talked about some of the underlying mining fundamentals, the difficulty adjustment, the Bitcoin price, the growth rates, the strategies. In terms of margin, Anthony, this is another trend we're going to be talking about over the next few weeks as we start to see these quarterly earnings come out. So I know Hut 8 just scheduled their Q2 results. We're going to start having the CEOs on. Sam Tabar, we're hoping to get on either late this week or next, along with BTCS. We're going to start seeing some updated margin numbers. Now, IREN just came out with their monthly production report yesterday. They break down their power costs. They had a margin or gross margin of around 75%. Looking at your live miner margin on our website, you're within about 1% of that one, Anthony. So fairly accurate. I know Hive was pretty spot on last time we got earnings from them as well. Can you talk to us about the margin profile of these companies as it relates to the pivot away from Bitcoin mining to HPC, kind of that duality, and also what we can expect going into the next round of earnings here?
Yeah, it's interesting when you've got miners obviously operating in different locations. Those miners in Texas have been able to benefit from the low energy prices, the low market prices. This isn't miners on PPA agreements. In fact, you have the likes of Riot, who do have a PPA agreement for the Rockdale facility. I think it's 345 megawatts, and the price of energy there ran about 3.8 cents. And what they decided to do was the Corsicana site, which is 400 megawatts. They decided to go to market rate. It takes a considerable amount of capital. You've got to have a lot of capital available. But what they've decided to do is looking at the forward curves for power in Texas, and they've been really positive. And actually, that strategy's paid off for a number of Texas miners who've been able to achieve close to 3 cents a kilowatt hour. Now, some of the miners outside of Texas probably achieving maybe 4 to 5 cents. We've talked about Hive in Sweden and Canada not being able to get a blended rate anywhere near that figure. Hence, the margins are down at the moment, but we expect those margins to improve as Paraguay gets more and more energized. As I say, the power is more volatile in the Bitcoin mining space, less volatile in the HPC space because the requirements of power is not as significant. If you look at IREN's update yesterday, and they're delivering $2.3 million in terms of monthly revenues for HPC. The power cost associated with that is about 2%. Even the most efficient miner out there, which is IREN at the moment, even if you look at their power cost as a margin of their revenue, it's around about 25%. That's how much, and that's on a cheap scale. If your power costs are anywhere near 5 or 6 cents a kilowatt hour, that could be over 50% of the Bitcoin mining revenue just in power. And then you've got to go through all the operating costs. You've got to remember that you bought the machines in the first place. You've bought facilities, you've refurbished sites, you've paid yourself wages, you give yourself stock compensation. So all those other costs, you've only got 50% less to cover them. And that's the challenge at the moment. When you start adding in all those costs, most of these miners in that table just aren't making a real profit. From a cash perspective, they are making a cash flow profit, so they are managing to keep the business going. But at the end of the day, if you're doing these calculations accurately, you want to build in there the fact that it's cost you money to get to that position, and that's why depreciation is the standard metric or the standard cost that accountants use to determine the true cost of an asset.
Yeah, some good commentary there. And I like walking through this holistically, Anthony, because it's also interrelated. The strategy, the targets, the metrics, and obviously the Bitcoin price all coming together as these companies try and navigate this challenging industry. Now, speaking of navigating a complex industry, Miner Madness 4.0 just launched yesterday. We've already got a couple of people on the leaderboard up nicely in the first 2 days worth of the competition. So they're managing to navigate the field quite well. In terms of the analyst board, Bitcoin Mining Stock Guy was top of the pack this morning. I'm not sure if that's changed now. An exciting competition, Anthony, and we expect the fourth iteration here, or Q3 calendar 2025, to be a big quarter for the miners.
Yeah, I mean, it's great returns in the space of literally, a day and a half. But this is a day and a half into 3 months, and the volatility. I think last competition, I think after the first week, I was leading the competition at one point in time, and then as the period went through, slowly came down the rankings. But it's great to see, somebody out there achieving 20%, literally 1.5 days into the competition. That's a fantastic return from BTC Ben. He selected Bit Digital, which has performed probably better than any other stock at the moment, to be honest with you. Bitfarms has also had a nice green period, and having Soluna in there as well. We talked about Soluna today, up 16-17% at the start of the podcast. So he's got effectively 3 winners in there in his selections. Not so great if you've selected Core Scientific, and bear in mind, when the competition was closed, we didn't know about too much about the potential deal, and so people would have submitted their 3 miners before that deal was announced, and now we're seeing the share price come down. We've still got a while before that gets approved, so there might be some more volatility in that share price as we go along there. But Core Scientific won't be helping many people. I know it's in my selection. Penny had it in his selection, and a few other of the analysts have got it in their selection as well. Hence, we're probably a bit further down the leaderboard than we'd like to be. But who knows, if the CoreWeave price starts rising, then the Core Scientific price will also rise to take account of that. It's a bit of an arbitrage at the moment between the two stock prices on how this deal ends.
About 8.1 to 1, I think, was the ratio you brought up yesterday, Anthony. So we'll see how that shakes out. As you say, hasn't been voted through yet, but the offer is on the table. Let us know your thoughts in the comment section below on miner targets, miner margins, and this CoreWeave buyout price. We'd love to hear your thoughts. If you're still watching, hit the like button. Feel free to subscribe. We'll see you back here tomorrow.